Most traders are trading SPX 0DTE completely wrong. They open the chart, they see the market moving higher and buy calls, they see SPX dropping and buy puts. Then they spend the next 30 minutes hoping they predicted the direction correctly. I don't think that's how SPX 0DTE should be traded. When I trade 0DTE, I'm not trying to predict every move in the S&P 500. I'm looking for market structure, GEX, liquidity, favorable positioning, and defined risk setups. In this video, I'll show you exactly what I mean. The biggest mistake, in my opinion, starts with the question traders ask. Most people begin with, is SPX going up or down today? But that's not the question I'm trying to answer. Even if you're bullish, that doesn't automatically mean buying calls is a good trade. And even if you're bearish, that doesn't automatically mean buying puts is a good trade. Direction is only one part of the equation. You also have volatility, timing, liquidity, option pricing, market structure, and risk. With 0DTE options, all of those variables matter very quickly. So instead of asking, where is SPX going? I prefer asking, where do I have a favorable asymmetric setup? That's a completely different way of thinking. Another mistake I see constantly is chasing momentum. SPX makes a fast move higher. The trader doesn't want to miss it. So they enter after several green candles. But now the entry is worse. The market is closer to potential resistance. The option may already be more expensive. And psychologically, you're immediately under pressure because you entered after the move instead of before it. A professional process should be the opposite. I want to identify the area where I would be interested before SPX gets there. Then I wait. If the setup appears, I trade it. If it doesn't, I don't. There is nothing wrong with missing a move. One of the most important things I've learned trading 0DTE is that you do not need to trade every opportunity. That's actually one of the things I talk about regularly with the community. I share market observations, updates, and the reasoning behind the setups I'm watching. This lets you see what I'm looking for before the trade actually develops. I'll leave the Reddit community link below if you want to follow along with those updates. The point isn't to copy a trade, it's to understand the process behind it. This is where GEX becomes useful for me. And I want to make something very clear. GEX is not a magic indicator that tells you exactly where SPX is going. I don't use it that way. I use GEX as additional market context. I'm looking at where important gamma concentrations are located. I'm looking at where liquidity may cluster. I'm looking at how positioning changes around important strikes. And I'm looking at whether those areas agree with the broader market structure. For example, if my overall context is bullish and I identify a strong area below the market where positioning and structure suggest support, I don't necessarily need SPX to rally aggressively. I may simply need it not to break that area. And that opens the door to completely different strategies. Instead of buying a call and requiring a large upside move, I can potentially structure a bull-put spread below the market. Now I'm trading an area and a probability. I'm not just making a prediction. This changes how I select strategies. If the market structure is bullish, I may look for a bull-put spread. If the structure is bearish, I may look for a bear call spread. And when conditions suggest a more stable range and I have favorable levels on both sides of the market, an iron condor can make more sense. Notice what's happening here. I'm not starting with the strategy, I'm starting with the market. That's extremely important. I don't wake up thinking, today I need to sell an iron condor. I first analyze SPX, then I decide whether an iron condor, directional credit spread, or no trade at all makes sense. The strategy should adapt to the market. The market should never be forced to fit your strategy. The next major difference is risk. SPX 0DTE has a reputation for being extremely dangerous, and it absolutely can be. But there's a major difference between trading 0DTE with uncontrolled exposure and trading a predefined structure where the maximum risk is known before you enter. That's why I prefer defined risk trades. Before I enter, I want to understand, what is my maximum loss? What is the premium? Where is my short strike? How far is that level from the current market? And does the potential return justify the risk? A high win rate does not protect you from poor position sizing. You can win repeatedly and still destroy your account if you're risking too much when you're wrong. Position size matters more than most traders realize, And this leads to something that isn't very exciting, but I think it's incredibly important. Sometimes the best SPX 0DTE trade is no trade. There are sessions where I don't like the structure. There are sessions where volatility changes the setup. There are days where the premium isn't attractive enough relative to the risk. And there are environments where SPX is simply too unstable for the setup I'm looking for. You don't get paid for the number of trades you take. You get paid for taking good trades and surviving the bad ones. For me, selectivity is part of the edge. And this is another reason I like having a place outside of the videos where I can share what I'm actually watching. The Reddit community is where I can post updates and market observations as these conditions develop. That way, I'm not trying to squeeze everything into a 7-minute YouTube video. So if you want to follow the thought process between videos, that's where I'd start. So if I had to summarize how I approach SPX 0DTE, it would be this. First, market structure. What type of environment am I trading? Second, GEX and positioning. Where are the important areas around the market? Third, liquidity and key levels. Where does the setup actually make sense? Fourth, strategy selection. Bull put spread, bear call spread, iron condor. Or nothing. And finally, risk. How much can I lose if I'm wrong? Because that's the part you actually control. I don't control where SPX trades 20 minutes from now. I control where I enter. I control what structure I use. I control how much I risk. And I control whether I trade at all. That's the real edge. And if you want to go deeper into how I apply that framework in real time, that's what I use the Discord for. The Reddit is where I share updates and ideas publicly. Discord is where we can go deeper into the market analysis and trade discussion as the session develops. I'll leave both links below. So no, I don't think SPX 0DTE should be treated like a lottery ticket, and I don't think the goal is to predict every market move. The goal is to develop a repeatable process where you understand the structure, identify favorable levels, control your downside, and wait for the right opportunity. If you're trading SPX 0DTE by chasing candles and guessing direction, I think you're making the game much harder than it needs to be. If you enjoyed this breakdown, subscribe because I'll be posting more real SPX 0DTE trades, GEX analysis, and strategy breakdowns here. And if you want to follow the updates between videos, check out the Reddit community linked below. For deeper real-time market analysis and trade discussion, you can also join the Discord. Both are linked in the description. Thanks for watching. I'll see you in the next one.